Hey, what's good? What's good? What's good, man? Happy Easter. Happy Resurrection Day to everybody. Um, y'all already know, man. While you here, leave a like, comment. I love when y'all comment so I can tap in with y'all. Be active. Send us out to three people who need the information. I know it's Easter. I know it's Resurrection Day. Um, we still gotta get the information out. I definitely want to send this to Happy Easter, Happy Easter, Happy Easter, Happy Easter. Yep, Happy Easter. Appreciate you for being in the chat, Megan. I appreciate you. Um, but y'all know how we do, man. I'm about to give y'all some amazing information. Prepare you guys for the week, like always. I'm about to send this out to three people really, really quick. I want you guys to send this out to three people who need to level up in the market. We've had a lot of conversations today about tariffs, about the market, about investing, about just prices going up, like prices going up, things going up. And how do I tell somebody, yep, home prices about to go up, car prices about to go up, food prices are about to continuously go up, avocados, fruit, vegetables, it's about to go up, but you still need to invest at the same time, right? It's a tough conversation to have. It's a tough conversation to have because at the top, all the business owners, anytime we have a recession, the business owners will always win. Because if you have capital, if you have cash, there are going to be businesses that are amazing that just cannot sustain with increased prices. That just cannot sustain going through a recession, right? So I know you guys hear the term "the rich get richer." I don't like that term. I like to think of it as the smart continue to be smart because we have the same opportunity, just as major business owners, major institutions, major banks. We saw Capital One and Discover merge together. We're gonna talk about that. Um, but we had the power to have ownership in companies, one share at a time. Nvidia is $100, right? Netflix, it's $1,000. When they split, I'm sure they'll do a 10-for-1 split, and you'll be able to invest in Netflix for $100. Um, a company I'm sure all of you guys love, all of you guys been looking at, Palantir, was less than $100, right? So we have the power to do the same things that major banks, institutions, and other companies do in an easier time, in an easier way, by just investing in assets that will pay us for a long period of time. If you missed Nvidia when it was 400, 500, 1,000, you now have the chance and opportunity to invest in that company when it's $75. And if they didn't split, it would be $750, right? So I just wanted to get that off my chest. But first things first, happy Resurrection Day. Happy Easter. Thank you to the Most High. He's definitely blessed me on a personal level, put me through situations to show me he was real, and then gave me grace to show me his mercy at the same time. So we have to be thankful, we have to be grateful, no matter what you are going through, no matter where you are as far as finances, as far as career, as far as your life, as far as where you work, your job, family situation, right? You got to be grateful because there's always somebody else who's wishing that they had the lifestyle that you have. Your best day or your worst day, somebody is wishing and praying for that to be their worst day. There may be somebody else's best day, your worst day. So it's important that we just, be grateful. Thank God for what he did for us. And I asked myself, if it was me, I want you guys to ask yourself, if it was you in that position, would you have been able to do the same thing for everybody on earth? Would you have been able to sacrifice your life, sacrifice yourself for everybody else? Right? And it just goes to show how weak we are sometimes, how weak minded we are sometimes when we go through things when we have issues, it's nothing compared to what Jesus did for us. So I just want you guys to always keep that in mind. You know, we have to make sure that we keep the Most High first, because that spirit is through us every day, through and through, and everything we're doing. So, yeah. But happy Resurrection Day, happy Easter. I still don't. Okay, I don't know. Somebody help me. Somebody help me. Where did the bunny come from? I just want to know where the bunny come from. I love look at Easter is Resurrection Day. I don't know. I don't know the history behind it. I need somebody. I need to be more educated. Somebody help me understand where the bunny came from. But other than that, y'all know we Easter, we Resurrection Day, we with it, right? I just want to know where the bunny came from. That's it. That's all. That's it. That's all. But yeah, I'm gonna send this out to a few people real fast. Resurrection, got you. Uh, Imagine. What's good, Davian? My guy. My guy. Shout out to everybody in the chat, man. Shout out Brenda. Shout out Davian. Shout out Megan. Y'all been rocking with me for a minute. I appreciate y'all. I appreciate y'all. Y'all know, this where you come to get the information. This where you come to get ready for the week. What's good? V Nomad. I don't know your first name. You just say V Nomad. What's good? What's good? Appreciate you for pulling up. Appreciate you. I'm gonna go ahead and share my screen. Go ahead and share my screen. Y'all know we gonna get busy like always, man. I feel like this the least I could do. This the least I could do. Trump making it difficult. It's the least I could do, right? But before we go ahead and get started, if you don't know me, my name is Monte Weaver, right? AKA King of Stocks. And this is Alpha Investing, retail investing reinvented, where my goal, my job is to give you as a retail investor an edge every single week in the market. The edge that a lot of institutions, banks, hedge funds do not want to give to you and show you how to really fish on your own. So I want to give you guys an edge in the market. Let you guys know what's going to happen before it happens. And if you've been paying attention and you've been listening for a while, you know, I'm telling you what's happening before it happens. But I want to give you guys an edge in the week, edge in the market every single week, so you guys can be more prepared to take on this market. Because I know as the times get more turbulent, and a lot of things are getting a little bit more scary. But I can promise you, this is the perfect time to invest. The average return after a recession is 15% on the S&P 500. In a year after that, I believe it's around 8%. So it's an amazing time to be investing. And the rest of 2000 actually performs higher. So if you're investing in the small cap companies, you'll make some money. But as always, I appreciate you guys so much. You guys are coming and pulling up on Easter when you could be doing anything else. So I appreciate you guys the most. Let's go ahead and get to it. Easter Bunny is a blend of pagan fertility symbols, folklore, Christian holiday evolution, a cute, fluffy mashup of Asian modern traditions. Got you. So can we take it out? Can we take it out? Look, I'm trying to break. Look, rules are meant to be broken. I'm trying to break all the rules and make new ones, just like Trump is. Just like Trump is. I'm just trying to do them the right way though. I'm just, what's good? Business as usual, and you appreciate you. And y'all to think that I was thinking about dressing down. I said, you know what? Nope. Like I stream during the week. Sundays is business perfect. Sundays is business. Sundays is business. I said, let me put on the pink tie for Easter. Let me put on the pink tie. So, but I appreciate you guys so much. Y'all already know it's gonna be another great episode of Alpha Investing. But let's get into it. Let's get into it. As always, shout out to my team. Shout out to everybody in Apex who's been getting it. People been making money during this downturn. Hey, without me, I will say, without me, I do not want you to depend on anybody, not even me, for income. Because there are times I'm human, right? There are times when I may have a trade and losing streak. It came to an end. It came to an end, thankfully, right? But I do not want you to depend on me to make income or make money. I tell people on my team, people in Apex, if I die today, I want you guys to be able to have the information to pass down the information to your family and always be able to make money in any type of environment, in any type of market, if I were to pass away today. So shout out to the team. If you would want to join the team, you can go to apx-partners.com/tech. There are only 30 spots. I want a team of investors who are driven. And I'm going to give you guys the information and the things that I know so we can come together and collaborate as a team. Competition breeds greatness. So when I started Apex, I wanted to get people on my level and bring people up with me so we can all eat together. And it's not going to do anything but push me and make me a better investor and push the people who are on our team and make them better investors. So if you want to join the team, you want to know how to predict prices, we're going to be going over there tonight. We're going to be practicing. You want to know how to predict prices. You want to know where to buy Tesla forever. What to do, how to buy Tesla forever, how to buy, I don't know, Nvidia forever, Bitcoin forever, right? Then you can scan this QR code, or you can type in apx-partners.com/tech, and you can try to join the team. Over 50 assets with 3 different prices for each asset for you to buy, so you can make a lot of money even when the market is down. You can make money off of relief rallies. Come on now. But if you want to join a team, then scan this QR code and you can get busy with us. Now, first things first, you already know what we do. Come on, let me know if it's up or down. Chart up or down, we going long, we going short, is it ranging? What we doing? And here's a tip. I want you guys to tell me, I want you guys to start looking from left to right, right? Let's make this easier. Look all the way from the left to all the way to the right, and then tell me what the price is doing, and then tell me what the current trend, like what's currently happening. So look over a longer term time frame first, and then go to the most recent price data, and let me know what you guys would do. Down. Yep. It's down. Yep. We should be going short. All right. Great job. I keep telling y'all already know how to trade. You do it every day. You do it all the time. All right. So this one, up, down, ranging, long, short, nothing. What we doing? What would you do? Let me know what you guys would do. If your life is on the line to take a trade or to make a decision, and doing nothing is also a decision, what would you do? And again, you are different from the next person. If it does not make sense to you, don't do nothing. So if this chart did not make sense to me and I didn't know what to do, right? I would do nothing. Yep, and it's okay if you don't know. Oh, excuse me. If you don't know, it's okay. My job is to help you, but I want you guys to let me know. If you don't know, that's fine. Let me know so I can help you. Great job, Jelly. So Jelly said it's sideways, right? Or I see people saying it's down. So yep, the overall trend is down if you're looking from the all the way left to the right. Yep. And then if I look at the most recent price data for probably, a little bit in the middle of this chart, it's pretty much going sideways, right? So if you can see at the bottom, if you're looking at the bottom, right, I see right here, 1, 2, 3. These are opportunities for you to go long. I'm sorry, let me go back. And then 1, 2, 3, 4, 5. These are opportunities for you to be able to go short because it's pretty much just ranging, right? But honestly, looking at this chart, I would pretty much only want to go long once the price came down here because it's rejected from that level multiple times, right? But the overall trend is down, so technically you should be looking to go short, but sometimes there are objections to the rule. So if you see a chart and you see it keeps hitting a support level, and this is the exact same level, one, let's say this is $100, hit it once, twice, 3 times, 4 times, right? So on the fourth time, we should definitely be looking to go long for sure. So the good thing about trading, the good thing about the market, there are many ways for you to make money. There are always exceptions to the rules, but you need a system and you need a plan that you follow time and time again. So I was honestly, like as I'm trading now, I'm not looking to necessarily go long on a company like this because the market is down. So I'm looking to go short anywhere I can. Now let's look at this chart. Up, down, sideways, long, short, nothing. Let me know what we're doing. Last one. And you guys are doing an amazing job so far. I appreciate you guys for tapping in. And while we at it, let Trump fire Jerome Powell. The market gonna drop another 20%. I just had to get that off. I had to get that one off. Your boy tripping. Your boy in there tripping. Good job. Yep, the chart is going down, just like the market gonna be going down if Trump fire Powell. Yep. Right. But great job, everybody. The chart is going down, so we should definitely be looking to go short. And then if I'm just looking at it, I see kind of like a pennant forming. So if this asset came up just a little bit more, can he fire him? Yes, technically he can. He fired something. We gonna talk about it. He fired somebody else. I mean, he just okay. Can he legally tell you to buy? Yeah. It's a lot of things that they doing. It's a lot of things and conversations that we need to be having that I'm not talking about. That I'm not talking about. Because my brand is not that high yet for me to be having that type of conversations yet. For me to be invincible. I know y'all gonna rock with me regardless because y'all know I'm telling y'all the truth. But there's a lot of things going on that are not necessarily legal. But on to the next, right? World conflict resolution, politics, economics, earnings, and innovation. I'm telling you, this is what's moving the market. If you guys are paying attention every single week, you guys know that world conflict is high, right? So that's obviously moving the market, right? Trade war with China. The reason that the market is still down is because that issue has not gone away. It has only technically gotten worse. European Union said they're not abiding by the tariffs and they expect tariffs to stay in place. Okay. Politics, not looking good. Economics, trash. Ernest, hey, we gonna talk about it in Apex. You should know what companies finna report, Ernest. Um, and we gonna talk about some companies that's finna fall for sure. But innovation is still good. I will say innovation is still good, but it's not enough. If I'm looking, if this was a chart, I would want world conflict to be green, politics to be green, economics to be green, earnings to be green, and innovation to be green, and that would be an indicator to buy if all of these were going up. But 4 out of the 5 are actually going down. So that's blood to me and telling me that I should be going short. Even if you don't know how to look at a chart or read the chart, just from a fundamental perspective, you should know that we should be going short. But let's look at tariff news this week, right? So Trump, he reaffirmed the continuation of baseline tariffs of 10% on general imports and 25% on cars, steel, aluminum, affecting trade negotiations with the UK and the EU. So this is why the European Union said, yeah, we just expect tariffs to stay in place because We just can't come to an agreement with them, right? And let's be honest, no, like, okay, I would rather drive a foreign vehicle than an American made vehicle. That's just like most Americans would rather buy LVMH, Louis, Gucci, Prada, Tiffany and Company, right? So we're gonna see how this plays out. Well, he can burn it to the ground, I guess. Burn it to the ground. Sometimes you just gotta start over, right? I think this is a good idea? No. Is he gonna do what he wants to do anyway? Yes. So we have to act accordingly. The U.S. Trade Representative initiated Section 301 actions targeting China's maritime, I believe that's how you say that, maritime, logistics, shipbuilding sectors, citing unfair trade practices. So the trade representative, this Section 301, it initially started, I believe it was 1974, part of the Trade Act, basically trying to give U.S. protection against unfair trade practices with other countries. And they have just used this against China. It's kind of like a retaliation tool as another way to continuously fight with the country that has lived 5,000 years. And if you read their history and you listen to Ray Dalio and everybody else, fighting with China is not good long term. So the lawsuit was filed against the administration over the April 2nd Liberation Day tariffs, arguing executive overreach. An economist estimate a 45% chance of U.S. recession within the next year due to aggressive tariff policies, with GDP growth projections lowered. So not only, I put this statistic up, I believe 2 weeks ago, this will be the first time that we will have a recession while GDP is actually decreasing, which is scary. It's very, very scary. So we're going to see how this plays out. We're going to see. But regardless, you need to be investing in the market. And that's how we're going to get into our weekly market recap. I don't care what the market does. You can go long, you can go short, straddle. You can do a lot of things, butterfly options, leaps, right? So are you more bullish on the market a year from now than what it is right now? You got to be. Like, how much farther can the market drop? Let's say we drop another 10 to 20%. Okay, well, put them leap options in there. How far technically can the market actually drop? How far, how bad can it actually get? And how, if this is the worst case scenario, sometimes the good thing about hitting rock bottom in life, in the market, the only way from there is up, which is why it's an amazing time for you to be investing in the market when the market is down. Because a lot of times once you hit rock bottom, the only thing to do is get up. If you're a boxer and you get knocked out and you're on that ground and they count 1, 2, right? The only thing you have to do is get up. And we not no quitters. You watching Apex, you watching Alpha Investing, you ain't no quitter. You've been pulling up every week. Right? We not just gonna lay down. Even in this market, there's money to be made. So don't be scared. Continue to invest if you want the best prices and know exactly where to get in, right? Join Apex. But continue to invest and continue to keep fighting. Continue to fight with your portfolio. But let's look at the market. So Nvidia was down 5% this week. It's reported that they're gonna take a $5 billion loss. Microsoft was down. Why is everybody hating on Microsoft? Do they not own the best company? So how are you gonna be bullish on OpenAI and ChatGPT, but not bullish on Microsoft? Hedge funds, what are y'all doing? What are y'all doing? I know it's y'all overindulged in the Mag 7 trade, but come on now, Microsoft though. I don't know why y'all was investing in Google anyway. Amazon is a retirement pick. But come on now, Microsoft is a great company. Amazon was down, Tesla was down, Meta was down, the Mag 7 was down. Why is Apple up? Somebody help me. When are y'all gonna put the AI in Siri? When? But if we look as a whole, pretty much Lily, come on now, look at Lily up 16%. Okay, y'all don't if you ain't investing in Lily at 723, you don't want to make money. I told you a long time ago, invest in Lily at 723. You could have got 20% twice. Well, they trying to tell you 7 to 20% is the norm. Could have got 20% already. Come on, man. We got to pick it up. We got to set the standard. Microsoft own money. What new money are they making? They own 50% of OpenAI, which is the new money. Johnson & Johnson was up 5.8%. Walmart, Procter & Gamble, Coca-Cola, Costco. Man, PM, somebody take that company out. We can't be promoting tobacco companies. We can't be promoting tobacco companies. ExxonMobil was up. Boeing was up. Man, look at United Healthcare. They was down 23% in a week. So stop. When I tell you a price is gonna go here, stop telling me, do I really think it's gonna get there? If United Healthcare dropped 23% in one day because of this market environment, what do you think it's gonna do to a tech stock? If these companies do not do good on earnings, they're gonna have the same feat. Google, you up on the clock. Tesla, you report Tuesday. So Elon, you better be in order. You better sweep this earnings call and make it look good. You better make it sound good. You better talk about them robots. You better talk about them robots. Something. Because if not, you're going in the toilet. But this was a recap of the market. I'm trolling, y'all. My bad. I'm trolling. But this is a recap of the market. So obviously you guys can see that kind of tech kind of struggled. So consumer discretionary companies kind of struggled as well. Healthcare did pretty good, but I want you guys to pay attention. So this was more so like a risk off type of week where kind of technology really struggled a little bit, but you saw energy go up, you saw consumer staples go up, real estate, utilities, materials. But I want you guys to be aware of something called a bear market rally, where the market does like to rally, right? If you guys been pulling up to this thing in the morning, I kind of been talking a lot about the market. I want you guys to know a stock dropping 35% is equivalent to a stock going up 42%. So the math does not technically make sense. Anytime an asset goes up, right, it's always going to, the percentage return is always going to be higher than if a stock was going down. So you can make a lot of money, right? You can make 200%, you can make 100%, 500%. It only takes 50%, 30% to wipe out a large portion of that gain. So it's very, very important to know the math behind the market and just know percentages, statistics, things like that. It would be very, very important. But JP Morgan did well, Bank of America, Wells Fargo, MasterCard, Visa did well. Very, very slept on company that a lot of people are not talking about. American Express did well. Meta dropped 8%. Been waiting on you. But yeah, so we had a pretty good week in the market, and obviously, we had a short trading week. So I just wonder if we had a trading day on Friday, how it would have gone. But let's get into some market statistics. So let's look at the 10 best and worst days in the market over a 20-year period. I want to give you guys a tip. If you ever see the market drop 8 to around 12% in a day, it's probably not going to drop further than that. Now, that's not to say that the next day it won't drop that percent again, because you saw obviously we had the market drop heavily back-to-back days, right? But if the market typically falls like 7 to 12 or 11%, it's typically not going to fall any further. It's for reasons bigger than what you may think of why it will not fall further than that. But and if you ever see the market run up around 7 to 11%, it's pretty much not going to run up any farther than that. So I know we can get happy. You're going to have some relief rallies. You're going to have bounces. So it's very, very important to know and understand these kind of statistics. And if you guys just look on the left, you can see the obvious dates, a lot of 2008, 9, 11, and 2020. So this just goes to show what type of time and environment we are in. We are very much in an environment like 2020, very much in an environment like 2008. I know a lot of people are talking about 1929. I will tell you, if this market was like 1929, I would have been told you to take your money out at the top. So when I told you guys that the market was going to fall this year, now I was wrong, right? I did see us. I thought we were going to go up 20% this year. I'm gonna have to eat that. I think we can still come out the year positive, but Trump, you're gonna have to fix it, dog. You're gonna have to do a lot of stuff. You're gonna have to do something. But this is just good to see this type of chart, see these type of statistics, so you guys can get an understanding of how the market likes to move. So again, generally, if we fall or go up 7 to 11%, we're usually going to stop there. And then just know a lot of hedge funds and institutions, if we do go up 7 to 11% in this type of environment, you're going to see a lot of institutions taking advantage and profit taking. So the market is going to turn around and go back down. And anything that goes up, it's going to come down. So you saw how Palantir, Apple 11, all these companies, right? Anything that goes up in a straight line is bound to have a fall and come back down. So it's the same thing with the overall market. But let's talk about the Mag 7. Let's talk about the Mag 7. So being along the Mag 7 has finally been dethroned as the most crowded trade after 2 years. Being long gold now takes the top spot. I apologize for not finding this sooner. I apologize. But gold is now the most overcrowded trade. And, I honestly think it has room to continue because there's still a lot of uncertainty. There's still a lot of issues. So anytime you have a lot of issues in the world, gold is always going to go up. Silver is going to go up as well, but not as much as gold. Gold is pretty much one of those assets that a lot of people like to flock to. Now, would I personally have ownership in gold? I mean, if we ever go into a world where it's like zombie apocalypse, you might need some gold. You're gonna need something to barter, right? We were the Changing the World Order by Ray Dalio talks about how the world started off as barter. It's a very, very good book to read. So first, you just had gold, you were trading gold and exchanging gold. But gold is too heavy to carry. So that's why they had silver coins, dollars, right? But it just goes to show how a lot of people are not liking the Mag 7 no more. But I'm going to keep the same philosophy as I've been keeping for the longest time ever. Wherever the market is down is where you should be. So if people are giving up on the Mag 7, that is time for you to actually be investing in those 7 companies. If you don't want to own them individually, you can own the ETF. It's called MAGS, MAGS. I believe it's around $40 or so. So that'll give you exposure to the Mag 7 for sure. So that would be a good investment. But let's talk about the best stock in the Dow, Coke. Who would have thought, right? Who would have thought? But in times, if you look at the landscape, right, during a recession, people are going to cling to food. People are going to cling to soda. That stuff never goes away. So anytime you have a recession, people are obviously not as bullish on tech companies, which is a mistake. But people, they mostly get more bullish on protective assets. And Coke is a company that if you go to Walmart, if you go to any store, you're going to see that Coke. You're going to see Coca-Cola. I don't know what it is about Coca-Cola. I done tasted it myself. I don't like it, but it's a big demographic of people, and they got a good target audience who they are targeting that loves Coke. It's just not a good taste for me. I'm not judging. If you love Coke, keep buying it because you helping Coke stock go up. So, but if you drinking it, it wouldn't be one of my favorite companies to invest in. But at the right price, you can make money on Coke for sure. And the worst performer is Nike. Come on, dog. And I don't know how to save this company. I've been trying to think. I've been trying to think, and they just don't want to take the route of buying up all the smaller brands and having it under the Nike umbrella. You don't need the Nike brand to be profitable, be successful. Be like LVMH and go acquire all the other brands, give people an illusion of choice, and let all the money lead back to you. That's what Procter and Gamble does. That's what LVMH does. That's what Mars does. So I mean, it would be smart for you to follow a business model and have a monopoly, but that's not the route that they're taking. So we're gonna see how Nike does. They have a new CEO coming in. He has a really, really good track record, been in the company for a long time. So definitely, he's been handed the ship at worst. You're like, hey, it can't get much worse. So, I'm definitely rooting for him for sure. And I think he's going to be able to, make some changes in the company. But are they going to get back to that? Maybe in 10 years. Maybe in 10 years. Things go out of style and go back in style. So, they'll come back around. But for the near future, I think they're going to continue to struggle for a little bit. Now let's talk about it. Big tech this, big tech that. And I'm a tech person, right? But Texas Roadhouse has outperformed Google, Apple, Meta, Microsoft, and Tesla over the past 5 years. And if you've been pulling up to the stream in the morning, I've told you there's a difference between the company's name and the actual returns that the company gives you. There is a big difference. So I know we may like Apple, you may like Meta. Meta is an amazing company. Microsoft, Google, right? But if we are looking on a pure return basis, which is pretty much the only thing that matters, Texas Roadhouse has outperformed them. Now, will it be short-lived? Yes. Yes, it will. Because when we come out this recession, boy, all that money is going to go funnel right back into Microsoft, Meta, Apple. I don't know about Google. I don't know. I don't know. Google. But it just goes to show how you can make money in different sectors that are not talked about. And I wonder, I'm sure the volatility, meaning like the up and downs in the actual asset of Texas Roadhouse, is not that volatile. But it's also, I think this is definitely like an unfair comparison because Texas Roadhouse is like a growth stock. And if I look at their company really quick, I think they recently IPO'd. They IPO'd, what was this? It's not pulling up, but they didn't IPO that long ago. So I definitely think this is like an unfair comparison. But I mean, nonetheless, you still have to look at the returns that it's actually been given. So Texas Roadhouse is a company that you can put on your watch list for sure. But yeah, Texas Roadhouse, they IPO'd in 2017. So, or no, not 2017. They IPO'd in 2005. 2005. So, um, the lifespan of that company has been shorter. So they should have more gains in them because the lifespan of that company has been shorter. And the shorter the lifespan of the company, the higher the returns you're usually going to get. So if you look at Palantir, I know a lot of you guys love that stock, love that company. Palantir has not been around for that long, so the returns in that company are going to be higher, right? The longer the company has been around, usually the lower returns it's going to give you, just because a lot of people the companies get stale, people get tired of being in the same thing, which is a mistake, but people get tired of investing in the same company over and over and over again. But gold is now outperforming the S&P 500 over the last 20 years. And I just find this funny. You know, they always try to skew things and make things look different than they really are. I just wonder if gold will still be outperforming the S&P 500 over the next 5 years. But nonetheless, it just goes to show how gold has really been keeping hold at its standard. Gold has, gold is a slept on asset, but we can make the case if you are a hedge fund manager, are you going to put gold in your client's portfolio? Should it have a spot? I think gold should have a spot. I think gold should have a spot. If you look at Ray Dalio's all-weather portfolio, gold is in there. Equities is only 30%. So I think if you are trying to make a portfolio that, if I'm looking at like how hedge funds invest, if you're trying to make a portfolio that is durable in any market, I definitely think you got to have some exposure to gold for sure. Do I think that's necessarily like the best way to make money or get returns? No. But there's a certain clientele of people who do not necessarily care about the returns. They just care about the safety, right? And for that type of clientele, if you're looking towards retirement, for sure, I think gold should definitely be a part of your portfolio. Having exposure to SPY is always good because these companies are built to outperform the economy. So even if the economy goes down, these companies are built to last. They have teams, they have management teams, they have economic teams, they have people who are looking at this stuff and forecasting things just like we are. So they are going to pretty much get through any tough time, right? But I definitely think if you are, looking towards retirement, gold should definitely be a part of your portfolio for sure. Now let's look into some big moves. So Bill Ackman took a 19% position in Hertz. And it caused it to go up, I think, over 100%, I think, or maybe 45% or so. So let me know in the chat, are you buying or are you selling Hertz? We hopping on this train or no? We hopping on this train, and I got the chart at the bottom for you too, so you can see it. But are we hopping on this train? We hopping on the Hertz train, or are we gonna leave it alone? Whatever y'all decide, I'm rocking with y'all. I'm rocking with y'all. I got some Roy and Kitty in me too. I got a little bit of Roy and Kitty in me, right? I'm ride or die for my retail investors. I'm ride or die for y'all. We hopping in Hertz or no? I guess y'all should be asking me. If you ask me, I say no. I say no. I think we should not be chasing returns in companies that have not been proven. There's a lot of other places to put your money in great companies that have a lot of amazing potential than for us to just be playing around in a company like Hertz. I wouldn't have, there's a portion of your portfolio that you should have where you just gamble. I think like 5% would be a good number. So this could go in that category. Making it 19% of your portfolio, I think that's definitely a big mistake, especially as a retail investor, because you don't have the capital to come back from a mistake like this, like most institutions or hedge funds do. So I definitely don't think we should be getting on this Hertz train. There are a lot of other companies that are having rapid growth, have a lot of potential to do well. Excuse me. Than for us to just be trying to dibble and dabble in a company like Hertz. So if you ask me, I would hit that sell button. If you are in this company, and you got it at a great price, shout out to you for sure. I think you have amazing, you got some amazing returns and gains. I definitely would have liked it to drop a little bit further if I was trying to invest in this company. I'm looking at this company like meme coin type, like crypto type, meme coin type of investment. So I'm not against investing in it. Obviously, just getting at the right price, but I definitely would have wanted it to fall a little bit further for me personally to invest in it. But That's how it goes, right? You have to be, if the asset does not go to your buying price, don't buy it. I missed out on Meta. I missed out on Netflix. And it's perfectly fine. All I need to do is wait for them to have another drop, and I will get in. When you are upset that you missed the drop, you need to take that time. So when you were a kid, right, and you did something you know you weren't supposed to do, and then like your mom, like you don't get a whooping, you don't really get in trouble, and you just have a conversation, and then she say, "I'm not mad, I'm just disappointed." Ooh, that hurt the worst, right? That used to hurt the worst. It's like, dang, I let you down, right? So when you have a drop that you missed, that's how you need to. That's the conversation you need to have with yourself, right? And you need to sit down and you need to reflect while you're watching the run up. You need to reflect on your inability to execute, your inability to do the research and put the work in and be ready to take advantage of the opportunity. So you can make sure it's not to dwell on the loss. It's to make sure when another opportunity like that comes again, you do not miss it, right? And it doesn't necessarily have to be with that company. It can be with other companies as well. So, but um, if I was this company is definitely finna fall. So, like I said, anything that goes up in a straight line is bound to come down. So I would not be surprised this week if it fell. And if I'm wrong, you can blast me, you can clown me. But I'm like 95% sure this company is gonna fall this week. Not necessarily back down to that level, but just because Bill Ackman takes a position and it doesn't mean it's a good investment. That just means Bill Ackman thought it was a good investment. Like we go, okay, let's pull up the. Y'all know what I like to do. Let's go. Let's stop the program real quick and go to Alpha Investing. I mean, and go to stockanalysis.com. Company is down 62% over a 5-year period. Lord, if we look at the revenue you had higher revenue back in 2019. Okay. Um, Profit margin negative, like okay, negative 31%. And the profit margin has been decreasing since 2022. Um, so I don't think this is a good investment. For us as retail investors, we need to be a lot more diligent and have a lot more courtesy when we are investing. So I don't think this is a position that we should be taking. This to me is like investing in RGTI. Have a percentage of your portfolio where you just gamble on companies like these. Make sure you buy them at the right price though. So and Capital One acquires Discover. So federal regulators approved Capital One's bid to become America's largest credit card lender, signing off on the company's purchase of Discover. And this happened on Friday. So this will combine two of the industry's best known names, making it the biggest credit card company when customers' outstanding balances are combined. So they're about to have pretty much the most debt. They're going to own the most debt. And if I'm looking at America, um, and and a lot of people, 60% of people are paying in installments to go to Coachella. I was having a conversation today. Me and my dad, we were talking about like the because there are some people who don't have cars and they just Uber everywhere, right? And I was like, well, I don't think that makes sense. At first glance, like it doesn't make sense. But then when you just break it down, and you're like, okay, you got your car payment, so that's like 500, and then you got car insurance, so that's another 200. You already got 700, and then you have um gas. There might be another 200, so we're looking at $900, right? So almost $1,000, and then you got maintenance on the car that you got to keep up with. You need an oil change. You need a car wash. You got to clean the inside of your car. You got to get new tires. You got to get a new battery, right? That may be not happen after 5 years, but we know once you start working on the car, you usually never stop working on it, right? So I did the math and I'm like, well, I mean, it's not necessarily bad if you didn't have a car and you were just Uber. Would I want to do it personally? No, because I definitely want the convenience of going places at my own will. And I just don't like. I wouldn't want to get in the habit of just constantly spending. I think if you got to continuously spend on like Uber or Lyft, that's getting a bad habit of constantly swiping or constantly ordering something. So like as far as like a psychological standpoint, I wouldn't want to do it. But I mean, it does not. It does not. It's not. It doesn't sound bad when you do the math behind it. But this acquisition, back to the acquisition, this acquisition just goes to show that during times of stress, you're going to see all of the biggest companies partner with each other. You're going to see a lot of the bigger companies buy smaller companies. So as the smaller banks start to fail, and as smaller companies start to fail during this time, you're going to see a lot of mergers and acquisitions. So I'm definitely looking forward to see what happens after this, because this is definitely going to pave the way for a lot more companies to get acquired, a lot more companies to merge together. If they allowed this during this time, when things turn around, you're definitely going to see the market blow for sure. And here is my trading tip for you guys. So if you are not 100% confident in the setup, do not take it. There's a lot of setups for you to take. You guys can watch me trade and look at setups every morning on the same platform, 8 o'clock to 9:30 a.m. But if you guys, I don't want you guys to just be dependent on me. I want you guys to be able to find your own setups, make your own money, go fish, right? But I want you guys to be 100% confident in the setup. All you need, okay, new rule for myself, and I think this should go for everybody. I'm 4 trades a month, max. 1 trade to pay your bills, 1 trade to invest, 1 trade for your capital to like increase your trading capital, and then the last one is for like free money to do things that you want to do. And then guess what? Out of those 4 trades, if you don't go 100%, you got to take something off from the back. So if I only go 75% and I only win 3 trades, guess what? That free money at the end, well, you ain't getting that. You ain't getting that. Bills, investing, and trading capital. If I only go 50%, right? I win 2 trades out of the 4. Bills, investing, right? No more. We're not adding to the trading capital, because you need to do with what you have. A lot of times we think we need more capital. You don't. You just need more systems. You need more discipline. You need to do a little bit better at execution. So yeah, that's how I've been looking at it. But again, there's so many setups to take. You can be patient. You can wait. You can be a tiger, right? You don't got to strike. You can just sit in the cut and be patient until your prey come out, and then you can go attack. But until then, just sit and be patient. Don't take setups that you are not 100% confident in. You should look at the setup and feel like you already made money just from looking at it. Yep, I know once it goes here, I'm gonna go short, and then it's gonna go here, and I'm gonna get out. Boom. Like you should kind of have it played out in your head. Now, obviously, we need to just follow our plan, follow our system, and accept the outcome for sure. But once you continuously trade over and over again, you see the same setups over and over again, you trade the same thing over and over again, you should be very, very confident in taking the setup. So if you are 100% 100% confident in the setup, then do not take it. And a little bit of motivation, the win is coming. Don't let the win worry you. And this just goes to show Resurrection Day. Imagine if Jesus did not hang on that cross for 6 hours. 6. So 6 hours of pain opened up a lifetime of freedom for everybody else around the world. That is a win for us already. And how long did it take? It took 6 hours of pain. Now, obviously, the process was longer than that, right? But the enduro, the worst part of it was 6 continuous hours. So, just stay patient, stay diligent, focus on the process, and that's going to lead you to the profits. I want all of you guys to win, right? We are all going to win. I can't wait till we get out this recession. Boy, ooh, this is like, oh, wait, all over again. Perfect time for you to be in the market. If you learn and being diligent, this is the perfect time, right? I came out in 2022, time of my life. If you are just now getting to this market now, it may be scary, but you are going to be an amazing investor because you saw the worst, probably the worst that you're going to see over another maybe 15-year period. So, but again, the win is coming. Don't let the win worry you. And I thought this was interesting. African proverb: a cat that dreams of becoming a lion must lose his appetite for rats. Meaning, to achieve greatness, you must let go of old habits that could hold back your progress. So that's people, places, things, environments, conversations, habits. We have to be able to break them. And it's hard, even me, right? I'm not telling you guys nothing that I have not struggled with or nothing that I have not tried to overcome myself, right? It can be something as little as working out every day. That's something that's going to help add to what you're trying to do. I don't care what you do. Run, jog, go to the gym, Pilates, I don't know, at home workouts. It's not going to do anything but help, right? Biking, I like skating, I do that, but that's going to be something that's going to help you, right? Spending some time on ChatGPT, learning, give yourself time to learn. Really ask yourself. I know as we get older, it's harder for you to section off times for you to learn, but you got to learn every year. You have to learn more and more and more every year. Especially if you are older, you are wiser. You are a lot wiser. There's a lot you've been around for longer. So there's some things that you should definitely just have more experience with, and that's gonna give you an advantage for sure. But we have to truly separate ourselves if we want to be great, if you want to do great things, if you want to make $1 million, 10 million, I don't know what your number is or what your goals are. If you want to hit those goals, you have to ask yourself, what is the lifestyle or who do I have to become for me to hit those goals that I want? Who do I have to become for God to bless me with the blessings that I want to receive? What type of person do I have to become? If you read the Bible, I read all the stories. Before God blesses anybody, he always puts them through a test. He always puts them through something that's going to build them up to become the person that they need to be so they can be ready to receive that blessing. So it's the same thing with us as well. Now let's look into this week. So we don't really have much economics this week. Monday you have U.S. leading economic indicators. Tuesday we don't have anything. You do have some officials from the Federal Reserve speaking, not Jerome Powell. But Wednesday you have PMI from services and manufacturing. You got new home sales. That's going to be important to pay attention to. Thursday you have initial jobless claims. I don't know if they skewing them numbers or not, but we're going to roll with it. You got durable good orders, existing home sales. And Friday, you have consumer sentiment, which I'm already knowing that it's probably consumer sentiment is down. But earnings wise, we got a big earnings week. Monday, we don't have anything notable. But Tuesday, you got Lockheed Martin, Verizon, GE, 3M, Raytheon Technologies, MSCI, Moody's, Danaher, Tesla, Intuitive Surgical, Capital One. They're gonna talk about that merger, and CB. I'm not off the top of my head. I'm not sure what that one is at the moment. But CB is reported on Wednesday. Boeing, trash. You got AT&T, O'Reilly, Chipotle, ServiceNow, IBM, Land Research, Texas Instruments, and I believe that's GoDaddy, GD. Or no, General Dynamics. General Dynamics. That's GD, General Dynamics. Thursday, you got American Airlines, trash. Intel, trash. Google, trash. T-Mobile, I like T-Mobile. You got LUV, Merck, Pepsi. I like Dow. I like Tractor Supply Company, and then you have SKX. It's on the tip of my tongue, but I can't remember it right now. I think that's Skechers. I think SKS is Skechers. Yep. And then Friday we don't have anything. But this week I am short, short. But I'm long Bitcoin though. I'm short. I'm short Nasdaq, short ES, short the Dow. I'm long ZB. The bond market. Got China and Japan tapping into that. Oh, but I'm long Bitcoin. I am long Bitcoin. And this week, again, it's economically light and earnings heavy. So pay attention to how CEOs talk about the impact of tariffs on their outlook, which is going to be very, very important. We had talk about a lot of CEOs talk about they're going to be pulling guidance, which is not good because things are basically getting so bad that they can't even tell you what they think is going to happen. So, and as always, pay attention to geopolitical conflict as well. And that's what I got for you guys this week. I'm trying to get the chart pulled up, see if we can get some charts pulled up for you guys really quick. Let me see something. Let's try to reload it. There we go. Chart pulling up. There we go. But if we let's look at SPX. So we down, man. We are down. The trend is down. So it's not looking good. But what questions do you guys have, or what charts do you guys want to see? Let me know in the chat what charts you guys want to see. I know y'all want to see some charts. Come on now. I know you want to see something. But SPY is down. If we look at, let's look at the NASDAQ. The NASDAQ is down as well. And then if we look on a lower time frame, we do have this gap to fill here. So we definitely gonna fill that gap, but I will not be surprised if we came down to retest these lows, dropping another 7%. And again, just to show you guys what I'm talking about. So this rally here is 14%, right? But the drop is only 12%. So the data is skewed. Meta, let's look at Meta. Let's look at Meta. I like Meta. Meta just broke a long-term trend line. They were holding that trend line since April. So obviously that's never good when a long-term trend line gets broken. So, and if we go to the day chart, they have a gap to fill as well. So I'm sure we probably gonna come up to fill that gap. And that's easy for Meta to fill this gap, right? That's only a 4% gain to the upside. So but yeah. So that's what it's looking like for Meta. Lulu to go short. If you're looking to go short Lulu, I think you kind of missed the opportunity. You might have to wait. I'm trying to see where I would get an entry if I was looking to short Lulu. Well, they do have like this. I mean, let me not just make nothing up. Maybe this is looking to form kind of like a pennant, something like it. Trying to find you something. Maybe. So if they like came up, hit the 72 and like this downtrend at the same time, that would be good. Because that would be one touch, two touch, and that would be the third touch with the moving average. Acting as resistance as well, so that would be good. And then if that would be a 7% drop, so that would be good for sure. TSCO. If you look at TSCO, um, um, I like this company long term. They definitely gonna fall some more though, for sure. They only fell what 23%. Yeah, they gonna fall more. But they had a nice risk repeat for a while, but it's a lot of volatility in this asset, so might got stopped out a lot on it. But TSCO is, I like it for a long term. AMD, I'm assuming you're talking about AMD. Look at AMD. Um, they fell a lot. They have fallen a lot. I mean, you got 200% upside to the all-time high, but when Nvidia and AMD are basically the same price, what reward does a hedge fund have of investing in AMD over Nvidia? Now, technically do they have to have some exposure to it? Yes, because they are bound to rules and regulations that we are not. But as retail investors, if we are not bound to own 100 companies or 500 companies, you don't have to. You don't have to own AMD. They're owning AMD because AMD is a good asset to hold if you're in the semiconductor space. Because you have to. They're forced to. That's why they're holding AMD. I promise you, if they had a choice, they would not be in AMD. NVIDIA, TSM, AVGO, ASML is better. Like, so it's not rewarding to invest in AMD over um NVIDIA. And I'm not gonna say I like AMD. I think AMD will be okay. But and Jensen himself, he said they buy from AMD. They buy from AMD. So but JP Morgan looks nice. They just bounced off this long term trend line, one touch, two touch, three touch. So they're looking to continue to be okay. What was that? A 28% drop. So I mean, if you got in here, 40% upside to the all-time high, you got to be in position and be ready to take advantage when the opportunity comes. And then if I am looking at fix my tie. If I'm looking at um, um I like JP Morgan long term. I like the long term. Um, any other companies you guys want to look at? Any questions? Want to know what I think about something? We gonna keep it chill on this Easter. But I like JP Morgan long term. I know y'all want to see Nvidia. No, y'all been asking about Nvidia. Everybody wants to know about Nvidia. How does Palantir look this week? Um, if I'm looking at Palantir, Meta and what they might do with him. Oh, okay. Um, it sucks to be a CEO and feel like you did everything that the president wanted you to do, and you still got to go to trial. He was leading the world on a bad trend. I mean, we watched him grow up and become the person that he became. So Mark Zuckerberg was, I think, 22 or 23 or so. Gender wars. Yeah. But if I'm looking at Palantir, like hedge funds, I told you the hedge funds, they could not wait to get in this asset. They could not wait. Um, if I'm looking at it, we might have like some double top action here. Definitely some resistance at like around $100. That's just like a psychological level for it though. Um, but this company is I have a hard time, and I'm all about stocks dropping. I have a hard time seeing this company stay down, especially during this time, just because of all the partnerships and things that they're going to continue to get. Like it's like a Netflix type of situation where they're like just in euphoria. If we look at Netflix, they reported after the bell on Thursday. Let's see where they are. But I do think Palantir can come back down. I do think it'll come back down. Um, if I look at Netflix, they are right at 1,000. They are right at $1,000, so they're right here, which was last month's high. Man, after getting almost knocked out completely in this drop, I'm real scared to get in the trade right now. Not acknowledging the charts, I only follow someone else. It's real hard. Yeah, I definitely get it for sure. Um, Pull up to the stream on Monday, Tuesday, and Wednesday, and then I think I have um surefire trade for you. I like I love hymns. Once it like hymns, once hymns comes back up to this downtrend line, one touch, two touch, third touch, come on, fourth touch. But really one, two, three, four, another touch with the 72 going down, short it down here. So if I was to draw like a position, it would be, why does it do it so that far? Short here. And especially with you being a little bit afraid, go on the more of smaller companies like Robinhood, Hims, Arm, because they cost less. So it can help you kind of get your confidence back. Um, and trade those type of companies for sure. Instead of trading like the big ones, because you got a lot of institutions in Microsoft, Nvidia, AVGO, companies like that. But like this contract that I'm looking at, by the time it hits the target where we would look to go short, it's probably gonna cost you $400 or so per contract to go short. And then the risk to reward on this is amazing. So because if we this is a 12% drop, you need to join APS to get knowledge of the charts. Hey, look, if you want to level up, just join Apex. I don't know how else to. It'll probably take you a month, one month. It took me six. It took me 6 months. I'm 5 years in now. Thanks for the advice. Lost big at Ally. And so, okay. So we gotta have you gotta have the stop loss. So I'm only gonna lose 20%. That's it. Biggest tip I can give you. Always have a stop loss. You gotta know going into every trade. It helps to know how much money you're gonna lose ahead of time, so you can just be okay with it. If I know I put up 1,000, I'm only gonna lose 200. I can live with that. If I know I put up 10,000 and I'm gonna lose two, I can put up with that. Right? I can't be. I'm not. I'm personally okay with losing 3, 4, 5, 6,000 if I put up 10. So we definitely gotta have a stop loss, for sure. But look, man, it's a lot of stuff. Man. I should be charging like 5K for Apex. I'm not, but for everything that's in there, I promise you, it's nothing like any course community you've been in. I can promise you that's a promise. But yeah, but Ally, I mean, Ally would have been a good one to trade because it's smaller. The price of it is low. Um, Ally would have been a good one to trade, and it's actually at a good price to invest in it long term too. But they haven't hit their all time high since 2021, so I don't know what's going on here. And I've never been one to invest in bank companies anyway. Oh, Lily, got you. Yeah. So y'all do know when I give you a price, you can invest in it long term and options too. Matthew put it in the Charles Matthew. He put it in the he sees like a channel pattern with Lily forming. Actually like yeah. Yeah, I don't know. I mean, I don't really see it as good as he does because obviously he drew it. But from what I'm looking at, this is what he saw. But we get into that price where I said Lily would go to 5 months ago. We getting there. Do I think we gonna hit it? So, but Lily, I mean, I don't think we should be trading. Okay, you can trade anything you want to. You can. I think it's a mistake to trade really, really big companies unless you have a surefire edge. Because the higher the prices of the company, the higher the options contract is going to be. Um, so I think we're definitely like when you first start out, just trade ETFs. Like you can look at SMH is one to trade. If I'm looking on like SMH is one. Um, XLK, XLY, and all of them are down too. So, but I think it would definitely be beneficial to start out trading like ETFs and small cap companies. But I promise you, Sergio, like once you learn charts, it's probably one of the best investments you can make. Because I started off the course that I bought. Um, it was Forex, but once you learn how to chart, you can chart anything. So I can chart stocks, I can chart currencies, I can chart cocoa, I can chart pretty much anything. Um, so it's definitely one of the best investments to make. And again, if you go to the New York Stock Exchange, everybody in the pit is on a computer and they have a chart. They got like 4 different screens. So if we're looking at the highest level, we need to be doing everything that the hedge funds and people are doing that are making money at the highest level. So like Paul Tudor Jones, Ray Dalio, they all know how to. Jeff Bezos knows how to chart. Everybody knows. Every CEO knows. I'm sure they know how to chart. They're not exiting. You see, like Mark Zuckerberg and Jamie Dimon had a perfect exit before the tariffs. Perfect exit. Like the beginning of the year was the perfect time to start. If you wanted to offload positions, that was the perfect time. Told you guys the market runs up every 2 years, and then we come down. So this year, and then if we go up into if we close higher going into a new year, we're gonna come down that year. So like the beginning of the year was the perfect time to get out of some positions. If you want to, but yeah, you gonna get right, brother. You was gonna get right. It don't matter how it go. We gonna win. However it go, we gonna win. We are gonna win. But that's pretty much all I got for you guys. Unless you guys got any more charts you guys want to see, any more companies, any more takes. I'm trying to figure out how I can save Nike. I'm trying. Why didn't y'all buy Lululemon? Why didn't y'all buy Lululemon? I look at Lululemon. Lululemon has okay. Lululemon's profit margin 17%. Let's look at their revenue. It's 10 billion, increasingly going up. Appreciate you. I got you. I got us. Lululemon. And then now let's look at Nike. 47 billion. Your revenue decreasing. It's not good. Come on. What we doing? Your profit margin is 9%. So Lululemon makes less money than you, and they have a higher profit margin than you. That's financial inefficiency. That's financial inefficiency. Free cash flow is 5 billion. Okay. So if I look at Lululemon has 1.58 billion free cash flow. Lululemon's market cap is 30 billion. So you got 5 billion. So if you wanted to buy Lululemon, you would definitely have to take on some debt to buy this company. So you're not going to be able to do an all stock deal. Like I'm trying, actually, I'm trying to help you. I'm trying to help you because you're down 35% over a 5-year period. I'm trying to get you right. So if we look at, okay, let's go to your assets. And let's see if you guys have some assets that you can sell to be okay. You got 37 billion in assets. So you gonna have to sell some of them assets that are not generating you no money, so you can go buy up the block. Somebody put me on the phone. Somebody put me on the phone with CEO. Hey, I appreciate you for what you're doing. I got so much respect for you. This is Monte Weaver, CEO of Apex Technologies. I just want to have a conversation with you. I think I want to add some value to Nike. I want to do this for free because I love you guys as a company. I don't want any conversation. I just have a few ideas that I think would be amazing for the company. I read this book called Business Model Generation. It goes over every single business model possible, known to man. And I think if you guys just kind of followed the same business model as LVMH, Procter and Gamble, Mars, and kind of took the approach of having a monopoly and buying up a lot of companies and giving people the illusion of choice while you are the company at the top that is profiting from it all, I think it will add great value and be beneficial to the company. Not only long term, but it will add to the revenue and increase the stock price. Thank you for your time and consideration. Come on, Nike. Come on. You was the first company I ever invested in. I got out quick. I got out very, very quick. I did. But you need a new product. You need a new product. I don't know. Because if you're not gonna buy up all these companies, you need a product that's better. Like your market cap has been decreasing for 3 years straight. Your PE ratio is low. You even dropped like, how did you go below? You went below your 2020 level. I appreciate you, Brenda. I'm just trying to help him out. You went below your that's a 5-year. That's a 5-year low. You finna be where you was at in 2016. What was this? 2015. You finna drop to a 10-year low. And for all you companies that publicly backed Trump, and now you crying because of what he doing, you should have looked at what he was doing the first time and been ready for this. While you crying that your company in shambles and you publicly backed him, you already knew what he was gonna do. So I don't want to hear no complaining. Like, laugh now, cry later. Your 400 day moving average is at 91, and the stock is at 55. You are cooked. You are cooked. Dead. Gravestone. But I am, as an industry, I am short apparel. I'm short apparel. Because if you look at if we go to Nike, if we go to profile, if we go to industry, footwear and accessories, the profit margin is 9%. Nike is at the top. Baker Outdoors is second. You got Skechers, Crocs. I would rather invest in Skechers, Crocs. Let's look at Birkenstock because everybody talking about Birkenstock. This company IPO in 2023. Revenue is increasing steadily by 20% each year, so that's a good sign. Um, Profit margin is 11%. It's higher than the industry average, which is a good sign. Would it be my first choice? No, but off of price, if you can get a bounce, like if you can invest at this easy level here, $42.92, and ride it back up to $61. I mean, that's 43% return that you can get. So Deck, I like Decker Outdoors a lot. I really, really like this company a lot. I like this company a lot. They had 1, 2, 3, 4, 5, 6, 7, 8. They had 10 straight weeks of declines. I didn't even think that they were going to drop as far as they did, I will say. But I should have known because first quarter, all these companies they usually give out weaker guidance. That's just a general norm. And for some reason, Wall Street takes that as a bad. Like it's a lot of analysts on Wall Street and investment hedge fund managers who are looking on too short of a time span to be great at what they're doing. How many years of experience do you need to know or to quickly find out that the company is going to give you light guidance at the beginning of the year? A lot of these companies, instead of doing what Elon does and overpromising and underdelivering, a lot of companies they underpromise and overdeliver, which is what Decker Outdoors does. And if you look at their financials, you couldn't ask for anything better. Revenue has continuously been going up. They own Hoka, Uggs, Coolabera. Profit margin is 19%. B2A, they're beating Lululemon, they're beating Nike. Free cash flow has been increasing since 2022. It's the highest it's ever been. Ratios. PE ratio is low. So if I was a value investor, I would love to invest in the company at this time with a very, very low PE ratio. Debt to equity is points like amazing. Current ratio, if you are in Apex, you know that metric. You see how high it is. We love that. Return on invested capital is great. Return on assets is great. Return on equity is great. So everything that you can ask for in a company, I like, and I like finding distressed assets like this or distressed stocks. If you, that's why I don't care about analyst opinions. I do not care. I do not care. I'm looking for great businesses at great prices. And for everybody who's asking me if a stock is going to drop that far, well, if you look at how far they dropped, this company dropped 60, almost 60%. So I like Decker Outdoors a lot. I like them a lot. But and then if let's just say you blindly bought it now, you have 113% upside to the all-time high. So if you just waited 2 years, can we stop having short? I'm going to give you a higher return than a lot of hedge fund managers. If you wait 2 years to get 113% return, That's 6.5% return per year, killing the S&P from investing in a distressed asset that is good financially. I'm trying to make my first millionaire this year. I'm waiting. So in November, when the market is up, I hope you listen to the information now. That's going to lead you to prosperity later. Because after this recession, trust me, I'm not going to be giving the information out like I am now. I'm doing it because Trump is going crazy, right? So I'm giving you guys a lot of information to make sure that we all eat during this time. But when this little tariff talk over, I'm done. You're gonna listen to the easy way or hard way. The easy way is gonna get you returns over a nice 1 to 2 year period. Hard way is gonna have you missing out on returns. Either way is fine, but I'd rather you eat than have FOMO. I don't like saying I told you so. I hate that. I would rather make you money than have to sit and say, listen to the information that's given the first time. And again, you already know how to invest. A lot of it is just the psychological factor of you thinking that you don't know how to because it wasn't taught to you, but you do it every day. You invest in groceries. That's an investment for your body. You invest in shelter. That's home. That's investing into your safety. You invest into your health when you buy toothpaste. If something goes on sale, that's the perfect time for you to buy it. So if something, buy one, get one, 50% off, that's essentially saying that both items are 25% off. So that's telling you buy 25% off of the high. In the summertime, the coats are going to be 50% off because nobody's buying coats. So you already know how to invest. But if you want to get outsized returns, learn how to chart, portfolio management coming soon, know how to predict prices, then join Apex. But that's all I got for y'all today. I appreciate you guys so much. Happy Resurrection Day. Happy Easter. You guys know Apex, we have a call here in 20 minutes at 9 o'clock. So I will see you guys then. But I appreciate you guys so much for pulling up to the stream as always. And I will see you guys in the morning. You guys can pull up to the stream again in the morning. I'm going over charts, going over my setups and things like that. So I'm definitely tuning into that. But I appreciate everybody who pulled up to the stream. I appreciate you guys so much. And I will see you guys the same time next weekend. For sure, I appreciate you guys. Shout out to Sergio, Brenda, David. I appreciate you guys so much. I appreciate my day ones, my real ones. I appreciate you guys. But Jelly, shout out to Jelly. Always, for sure. I appreciate you guys. So, but I'll see you guys sometime next week.